You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Are we done with holidays yet?
Get back to work.
I am just tired of holidays. Really? New Year, Shmoo Year.
Come on.
Jeez. I mean, come on.
Right.
Really? Did anything change for you from Thursday to Friday? Did your life suddenly turn around?
Yeah.
Did vast wealth suddenly come pouring into your possession? No. Nothing
But they woke me up
changed.
at like 12:30 a.m. on whatever day that was to tell me it was a new year. That doesn't happen every night.
I can't believe
Thankfully.
I stayed up for that. I stayed up for like 2 minutes after watching, and of all stupid things, I got to tell you, I was watching the ABC Dick Clark New Year's Rockin'
We flipped around.
Dick
Yeah.
Clark is like rocking from 6 feet
He's
under.
been gone for a few years now. Yeah.
But I got to tell you, I'm not a TV critic. I don't even play one on the radio. But that, I just hate all the music. Every single bit of it. I thought,
the woman sang Imagine right before the top of the hour, which is a great song, but I didn't think it was, I thought it was kind of
that's what I mean. I hated the music.
Let's get it energy up.
And
yeah,
I thought, okay, well, at least they'll have one kind of from my generation. I'm not thrilled with her music, but Cyndi Lauper thought, yeah, okay.
Girls who just want to have
And
fun.
then my ears started literally like bleeding during her performance. How can someone that famous with that many records be that off key? I don't know. And then the second song she did, it sounded like she was making it up as she went along. I like this lyric. Let's just throw that in there. Oh, it was just awful.
Hey, Ebenezer, should we get to the program now that the holidays are behind us?
Well, I just want to make the point that this is just like any other show. That's what I was going to get to. This is the same show it was last week. I don't care if it's 2020 or 2021. It's the same darn thing. It's a place for you to gather together with friends and neighbors in a socially distanced environment and talk about something that everybody deals with all the time. And what's that thing, Tommy?
It's called money.
Nicely
Thank
done.
you.
Yes, you're welcome.
I appreciate it.
And in this day and age, the universal we, all of us who are looking for a little bit of money from our money, particularly the money that you want to keep safe, the emergency money, we're looking at, I'm looking right now at bankrate.com, and the best CD rates in the country, 1 year CDs. Woo,
How much?
And 0.5%. Woohoo!
So you give them $10,000.
You get 50.
$50 next year. Wow, that's not much. Okay, but here's the thing. That leads to people making a lot of mistakes.
Well, because
see.
they're looking at this and going, well, that's nothing. I need more yield. What should I do?
Well, number one, you should not have a lot of money in cash, perhaps, anyway. That's a whole – we talked about this before. There's like $17 trillion in bank accounts that are making less than 0.5%. But for those of you who say, I got to make more money, I got to go somewhere and find some bonds, boy, have we got a deal for you.
Oh, come on.
No, just kidding. We don't have a deal for you. We don't want you to do
Yeah,
this.
I mean, come on. People are getting into junk bonds and
just when you thought it was safe, only to be in like corporate high yield bonds that Don just mentioned.
Junk.
How about going a little further east to go to
How much further afield
Uzbekistan?
can we?
You can go quite a ways.
Uzbekistan, isn't that a former Soviet Union republic?
I believe it is. The great news is they just sold 2 trillion Uzbek Sam. So you can call these Sam bonds. I don't know. Maybe I got that wrong.
Boy, them Sam bonds.
There are Sam bonds. Listen to this.
Sam
Here's
bonds.
why.
Yeah,
This is
well,
a
what do they
3-year
yield?
issue.
What is a Sam
3 years.
bond?
3 years.
Yeah.
You give them your money for 3 years. And the yield, 14.5%. 14.5%. I haven't seen a yield like that. I haven't seen growth like that since Tesla stock. And back, remember 2020, Tesla went up 700%. No, kidding. There haven't been bonds issued by any quality organization or government at that rate in the United States for about 40 years.
Well, the good news is that, how many trillion worth of SOM?
It doesn't matter.
Yeah, no, it does. $2 trillion worth of SOM.
How much is that in American dollars?
At the current exchange rate, wait, hold on.
I already know how much it is. No, $2 trillion.
I don't even know if I could punch in $2 trillion.
I already know the amount. So if you're going to go there,
what is it, like $23 million or something?
20 million.
Yeah.
No, pardon me, 200 million. 200 million.
Oh, yeah, right. I did 200 million. That's a trillion.
That's some bond there. You don't want to knock that down.
And the thing about this, it's SOM denominated.
Yeah, exactly. That's the other part.
So here's the problem. Let's say you bought a SOM bond back in 2013 and you held it to today. Well, just because of the currency drop, it's worth half what it was when you put the money into it. Their currency has dropped by 50% since 2013. That doesn't sound like some bond to me. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
Now everyone can meet the retirement of their dreams at Retire Meet America 2021 online. Sign up now for free at retiremeet.com. That's retiremeet.com.
For your real life and real future, Tom and Don are talking real money.
Oh, my goodness. Hey, our phone number is 855-935-TALK if you want to talk about your money issues. We're actually here on this holiday weekend.
It's the second day of the year. Come on, get over it. Use your time wisely to clean things up. That makes sense, but you can listen to the show while you're doing that.
Yeah, don't do that cleaning stuff. Come on. Just
come on.
Do it in the spring when you're supposed to. They call it spring cleaning for a reason. Hello.
All right, what's the latest on the SOM bonds?
I have to correct something. I made a mistake. I know it's hard to believe. But when I was looking at the SOM,
the good news is it only took the first show of the year to do it, so well done there.
I was looking at the wrong SOM. Apparently, all the extans have SOMs. They like SOMs.
Well, people like SOMs.
There's the Kazakh SOM from Kazakhstan, which is north of Uzbekistan, which is north of Turkmenistan.
Weren't you there for ninth grade social studies? This is easy.
It was the Soviet Union then.
I know, it was easier. One big thing on the map. Boom.
So I made a mistake when I talked about the depreciation of the value of the SOM. The Kazakh SOM, the currency. The Kazakh SOM is a much more stable currency, even though it's declined 50% since 2013.
Only 50% in 7 years.
The Uzbek SOM has declined 75% since 2016. 4 years? 4 years, right?
So you would have bought a bond that's yielding 14.5%.
Correct.
But the value of the currency would have declined by 75% in that same period.
Making your 10,000 SOM bond worth 25,000 SOM when you converted it, or $10,000 converted to SOM worth $2,500. Anyway. I was wrong before, and it's an even worse investment. 855-935-TALK. Before you get into any of the SOM bonds.
People are buying a lot of this emerging market debt.
I'm going to write a new song, and I'm going to sing it in key and be the next Cyndi Lauper. Constant bonds.
I'm just going to talk about a SOM of so go ahead.
855-935. I know where you were going with that. 855-935-TALK is our number. That's how well I know you. 855-935-8255. And Michael is hanging around waiting to ask us something. Hey, Michael, welcome.
Happy New Year.
Hello. Happy New Year.
Whatever.
Thanks for taking my call.
Happy another day.
And
go ahead.
I was curious about this 2020 year. There's been a lot of free money, handed out by the government, whether that be the PPP loan, the $600 weekly unemployment check, the $600, the $1,200 per person. Is all of that, quote, tax-free, or is that all something I'm paying taxes on it for this year? Any clue on
Well,
that?
there's a couple of different. Well, the PPP is a whole separate thing. That's a business loan, and so that money actually, from what I understand, is very new. As you know, the one the president just signed, they're going to allow you still to deduct the expenses that you used against the loan. So there was some discussion they wouldn't. So I think that the taxation there is pretty non-existent. Then you start to get into I don't think the $600 just check is taxable, Don.
No, but the extra $600 a week in unemployment is taxable.
Yeah.
That is taxable. So some is taxable and some is not taxable.
Great. So the stimulus type of free one-time checks for unemployment or the $600 per week is
right.
Your understanding of what's going on.
Correct. Yes. Yep.
Well, no, not the stimulus check.
The stimulus
not
was tax-free.
That the $600.
Yeah.
Here
the
you go.
unemployment is taxable.
Yes, the unemployment is.
And if that money was creatively rolled into stocks or anything like that, that doesn't really does that affect income bracket per se, or
no?
It's just pure gift. Okay,
it's a gift.
Great.
It's a gift.
Yeah,
okay.
It's a gift from you to you.
Congratulations!
Happy New Year to you.
By the way, thank you for your call, Michael. I was sure he was.
And but trust me, you'll pay that tax eventually.
Well, I was getting to that because I was sure he was going to say, "Hey, all this money they're handing out, how are we going to pay for it?" Well, as I always, when I see my grandsons, I say, "Thank you. Don't hate me in 30 years when I'm gone and you're paying for all this."
I'd like to extend a message to our good friends who I'm sure listen every weekend. Mr. Jeff Bezos and Mr. William Gates.
Step
I'm
up.
sure listen every weekend. Thanks, guys. Thanks, because you're going to get hit harder.
Well, you are. I mean, and I really like what Ken French says about all of this, about the debts, deficit, et cetera, et cetera. He says it equals future taxation.
Yep.
At some point.
It does. It has to. Somebody has to foot the bill someday, somehow. Now, some of the bill can be covered by deflation, by inflation, by reducing the value, by deflating the value of the dollar. But otherwise,
just for more on that, see Uzbekistan or Uzbekistan or one of the Stan brothers.
What you have to remember, though, is that with an economy as large as that of the United States, and its long-term potential still being so great, that we have done this in our history multiple times. It used to be a very laissez-faire economic management approach of the U.S. government until actually it was about the Civil War that it became less so, and then in the 20th century, after the Depression, it became a lot less laissez-faire and a lot more moving the money back and forth from generation to generation.
And by the way, don't argue with him because he is one of the few Civil War era survivors. So you can't argue with his economic analysis.
It's only because Elon and I were both alive during the Civil War, and he came up with a way to plug us into computers back then. He invented them in the 1860s.
By the way, Elon, he had a big year too. He's moved up to number 2, bouncing Bill Gates for the richest people in the world. You know, Jeff Bezos, always number 1 for like the last 3 years since Amazon stock has gone on its huge run.
Yeah.
And they moved old Elon's Tesla's up over 700%, bounced Bill Gates out of number 2. So Gates moves to number 3.
No, actually, Tesla, since its low in March, is up 10 times. It's
better than that. I was going to hold that till next hour.
It was $72 at the bottom of the dip, and now it's over $700.
It's up 12,551% since its 2010 IPO.
Oh! I'm just talking about since the dip this year.
Back.
1 year.
Right.
It's up 10 times. Now, I got to tell you, to me, it seems a little overdone.
Well, imagine how angry people are going to be that we told them to sell it back this fall.
Well, no, we tell
Don't
everybody.
call me.
No. We tell everybody to
not
sell
to own it.
everything.
Yeah.
We tell you to sell all individual stocks.
Individual stocks.
Do not own individual stocks. Own them through a mutual fund, because to do it any other way is dangerous. What if it goes down as much as it went up?
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I forgot. Oh, by the way, the phone number is 855-935-TALK. I forgot. We were told we can now do something that we didn't think we could do. And that is, we have a podcast, and it's on Apple Podcasts and all the other podcast services, but those Apple Podcast reviews matter. They make a lot of difference. If you like what you hear here, we'd really appreciate it. We love to read positive reviews, and they really help get the word out about the show. So go to Apple Podcasts and write a review. I can do that now. I was thinking
and
about
by the way,
show.
Yeah, I want to thank Scott for sending us a nice picture of grape nuts today. He was out shopping for grape nuts.
That was hysterical.
That was very kind of him to do so.
Remember last week we talked about Tom's big present, and he couldn't find grape nuts because there was a grape nut shortage?
There's something going on.
Well, he got grape nuts for Christmas. Yeah. What did he get? I mean,
lot.
You're a hard guy to buy for. You're a hard guy to buy for.
I agree.
And when you come up with something that great, you got to buy it, or that grape.
I know.
And then so now listeners are sending pictures of grape nuts on the shelves in the stores.
I know. So apparently they're prevalent in the greater Covington area.
Maybe just because of our show, the great grape nuts shortage of 2020 is now behind us.
They started harvesting more of them out back.
That's right. They went out in the grape nuts fields and started picking them. I don't even know what a grape nut is.
We sold them to someone else.
Are they made of grapes?
I have no idea.
Honestly, are they made of grapes? Why are they called grape nuts?
I don't think they have anything to do with grapes.
What?
They don't taste like grapes. They don't
look like
grapes.
I've never had a crunchy grape. I mean, I've had dried grapes, but they're chewy.
Yeah, but not like that. No, I know. Look, I didn't come up with. You call Post; they'll help you out with that. So
I don't know if they'll. I'm gonna have to look it up. But first, we have to take a call. 855-935-TALK is our phone number. Never mind. We're not going to take a call because we scared. Apparently, he was going to tell us that grape nuts were back in stock, and so we blew the surprise. Now.
I want to finish the thought, though, that you brought up about make sure people understand. We are not telling you to sell your stocks.
No.
Because this will come up. I guarantee it.
Oh, yeah. We get scathing letters about, you told people to sell Tesla. No, we didn't say to sell Tesla. What did we tell them to do?
Well, we from the get-go. And I don't care if you're starting your first ever investment. We tell you to invest in a diversified portfolio of thousands of companies. I hate the fact that Schwab et al. Are promoting slices so that you don't need the whatever Amazon's trading at today, $2,500 for a share of Amazon. You can go own a slice of that stock for a much smaller price. Baloney. You can go on 9,000 stocks at VT for $50.
I'm a big fan of bologna slices and pie slices.
Slice that up.
Yeah.
So it's where you are. And if you already held a lot of individual equities, a lot, because a lot of you come into the office, you have 15 equities are going to make more than the market. Baloney too, because we know that probably won't happen. So instead, own a diversified portfolio. That's the point we're trying to make, Don. You know that, and we're not trying to tell you.
I do know
run
that.
out and sell your individual stocks, but
I have to make fun of the fact that you actually do use the word bologna in a sentence that doesn't involve sandwich.
I haven't had a bologna sandwich almost as long as I hadn't had grape nuts until recently. So it's been a long time.
Well, wasn't there a time when bologna was actually a tasty German sausage? I mean, it's from Bologna.
All I remember is those fried bologna sandwiches growing up, which I never liked. I never liked putting that stuff in there and frying it up.
Really? You fried it? I just threw it on a piece of bread with some mayo.
People that I liked, but I saw a lot of people that did the fried thing. I never got into.
We were too poor to have a stove.
Oh God, we're not going there, are we?
So we just got it out of the.
I remember we just had to.
We left it. Look, it was cold in Colorado. We just left it in the backyard. We'd bring it in.
No mustard.
Get
or
the
anything
bread out
else,
of the
just
bread
dry
box.
bread. A little bologna.
No, we had mayo, but we kept that out back.
Oh, okay.
In the shed.
Yeah, fair
we
enough.
kept that in the planting shed, in the produce shed, in the root cellar. I don't know.
It was so tough. I remember. Yeah.
855-935-TALK. We'll talk about the things that really matter, really, not this stupid stuff in a few minutes. We do have some other things we'd like to talk about, so we're going to get to those in a minute. We want to talk about some of the mistakes you make when buying mutual funds. And how you're going to find this fascinating. We'll do this if we can. We'll do it after the break. How you can do actually you can get better advice, better mutual funds for a whole lot less money than going to your stockbroker. Really, you can.
Ooh, shocker.
A lot less. 855-935-TALK.
Tom and Don are talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
Reality radio for a really great future. We're talking real money.
We talk about money every single Saturday, and then we have this podcast where we talk about it like other days too. And you can listen to those podcasts on your favorite podcast service, or you can listen to the show on Como, or you can listen to this as a podcast later. You can call us at 855-935-TALK anytime, just as Judy did. Hi, Judy. Welcome to Talking Real Money.
Hi. I have a question. I'm retired, and I thought I would have my money equally divided into some safe money, like a CD or bonds or something, and stock market and et cetera. But, you started off the show talking about what I've been thinking about. Now, I wonder what your opinion is about investing in a mutual fund corporate bond, AA or A-rated. AAA would be best, of course.
An individual? Are you talking about an individual bond?
No,
or a bond
No, she said
fund?
mutual fund.
Yeah, you're talking about a fund. Okay, because bond funds are all over the ratings place. That's
and she said, you said AA or higher?
Yeah.
Yeah, AA or higher. Vanguard has a couple I've been looking at. Of course, I don't have the alphabet in front of me. It's something
That's
like
okay.
VBTLX?
Well,
that might be
VFSTX is the shorter version.
Yeah, the shorter. Right.
That's the short. But here's the thing, okay? So the philosophy, our philosophy goes as follows: that we think you can pretty clearly show this over the long haul. That you mentioned safe money. The safe money should be in safe instruments. The things that we trust, because they've always paid you back with the interest due, are bonds issued by the U.S. government. There's a few other governments that we trust as well. That's the safe money. The other money, Judy, is the stuff that's designed to give your portfolio some move upward over time, like stocks. So the portfolio, you're asking about moving money from safe things like CDs, I imagine, or like that, to corporate bonds. The problem.
My CDs are coming due.
No, I get that.
I was getting 3%, and in March, I'm going to be down to like 0.5 or something percent.
You are.
Invest in U.S. bonds because I'm a former federal worker, so I had that TSP, and I had 50%.
Great fund.
When I retired, I had 50% in bonds and 50% in the stock market. But now I'm not getting any. I was going to use that to draw down some money, so I'd have some income, so I would still have my cash. But now, I'm not.
And this
I'm
is
getting
this
like
is the thing.
0.5 with U.S. bonds as well, So I'm thinking maybe at least I could get some income if I had the corporate bonds.
Well, this is the thing, and this is where the trouble generally starts, is because people say, I'm not making anything on this part of my portfolio when the other part seems to be going up. And in the old days, I used to do this and this. The biggest leap I would make from you owning government bonds would be to a total bond fund where you still have probably half or maybe 2/3 in government bonds. Vanguard has a very good total bond market fund, and then maybe 1/3 of it in corporate bonds that are the safer corporate bonds, the companies that have always paid you back generally, always. Remember, even General Motors went bust, couldn't pay their bondholders. So the biggest leap I would take would be from owning those CDs to a total bond like the Vanguard Total Bond Fund. I would not just go into all corporates because there's added risk there. Corporate bonds have similar characteristics in some ways to stocks.
And if you go with a really broad, like the Total Bond Index Fund, your yield is going to be, well, if your maturity is going to be a little longer, your yield should be comparable, but you're going to get this great diversification that also helps reduce risk some too. Much, much greater diversification. So I think we're on the same page, Tom.
The Vanguard Total Bond Market Fund, I don't know the ticker, but that would be a very good option. I imagine, however, the yield is probably still somewhere around 2, maybe 2 point something. So it's higher than what you're going to get in a CD. And remember, it's more liquid than what you could put the money in. You could take the money out when you needed it. With a CD, you got to wait until that matures, right? So there's some benefit to all of that
Isn't the Vanguard Total Bond Admiral VBTLX? Isn't that right?
That sounds right. Yes, that is correct.
VBTLX. Yeah, that's right. And it is yielding 2.25 right now, which isn't
far
off of your CDs, but it's riskier.
Well, but she said her new CDs are going to pay her half.
Right. Not far off the old
CDs.
Up.
Yeah, the old rate. So that's probably as aggressive as I would want you to get when it comes to fixed income. And please be careful with all of this. Do not run out and buy emerging market bonds or something else that are paying a higher yield. There's a reason they're paying that higher yield.
No Uzbek Sambon?
No son of you, whatever, yes.
855-935-TALK. We are here to help. Truly. Give us a call, 855-935-8255.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Oh, and by the way, I neglected to mention that with the redesign of the TalkingRealMoney.com website, we have now a Listen to Us Live button where no matter where you are in the world, you can click on that and you can listen to the show live on Saturday.
Well, and I'm going to say thank you. While the rest of us were roasting grape nuts on an open fire, you were working away over the holidays, so you did some great stuff.
That's
the website.
What they are. They're roasted grapes.
You got a really high temperature.
They roast those grapes, and each grape becomes that little nugget, that little hard nugget.
I'm going to feel bad for the number of grapes I have to eat per day now.
You have 800,000 grapes in one box.
Think of the people that were ready to drink a great wine are hating me right now. Like, you stole the great grapes, bro.
Think of the fiber. Your white people were stocking up on toilet paper. It was the 855-935-TALK. Shh, Don, stop. 855-935-8255. There is a dirty little secret in the brokerage industry. It's been around.
There's more than one, by the way.
Yeah, this one's been around since the 80s. They are called C shares, or no front load shares, or contingent deferred sales charge shares, or something like that. They are your broker. I could check your portfolio someday. See if you have some. Your broker.
No, check it this weekend.
Yeah, your broker sells these as if they're no load funds. They'll say things like, "Well, yeah, we don't have any front load on these funds." And the implication is there's no load, but there is. They still get
commission. Load is a commission.
But here's something that's always bothered me. You go to your typical run-of-the-mill stockbroker who is a sales pusher. They're a product peddler. Their job is to sell a product and move on to the next customer. Trust me, I know what I'm talking about. I'm not just I've been in the industry, and I know a lot of people in the industry. It is a sales pusher business. So they will sell you one of these, telling you you're going to get this professional management and you're going to get this great diversified mutual fund. And I used a couple of examples. I looked at American funds and I looked at Invesco, which is Invesco Oppenheimer. I'm going to go with the Invesco Oppenheimer because it has a long track record. The American fund their Global Insight Fund is relatively new. And I wanted to go with a global fund so that we had a global portfolio, U.S. and international. And let's look at a couple of facts about this fund versus a portfolio that is managed by a professional advisor, a fiduciary fee-only advisor, non-commissioned, who charges 1% per year. That's going to be our assumption. Yes, there are a lot of advisors who charge a lot more than 1%. We think 1% is about right. Maybe 1.25% if it's somebody extraordinary. 1%. We're going to use 1%. All right? So the Invesco Global Growth C shares have an annual expense ratio, which includes the sneaky commission, of 1.98% per year.
Wow. I mean, that's pretty expensive.
Well, we're going to use the Dimensional Global Equity Fund as a proxy for the entire portfolio that an advisor would build. And we're talking about only equities, no bonds.
This is the Global Equity Fund is one mutual fund that holds only stocks.
All over the world.
Holds a global portfolio, correct. And what's the expense ratio on that one?
The expense ratio there is 0.28%.
Wow, can't believe how cheap that is.
0.28. So now, wait, let's add 1% for your full service, 100% fiduciary advisor who is there for you all the time, who helps you create a plan, who walks you through this, who rebalances, who looks at your risk tolerance, is always working for you, no matter when. They're there for you for life. You pay them 1% per year to be your employee. Bear in mind, your broker is not going to be your employee. Your broker is probably not going to call you again until it's time to sell you something new for a new commission. So you're going to be paying now roughly 1.3% to your advisor, or 1.98%, 2% to Invesco Oppenheimer.
And what Invesco Oppenheimer is going to tell you is that that's okay, because the work they're going to do is going to give you enough of a higher return to make up that difference. That's what they're going to tell you.
But there's the rub. You see, and that's why I went with the Invesco, because it has a long track record. The 15-year average annual return for that global fund, we're trying to compare apples and apples as much as possible, is 6.25% per year on average over 15 years. All right? Now, we've got to take out the 1% fee for Dimensional, because you got to pay your advisor 1% for the advice and the help on an ongoing basis. But this is assuming that they didn't do anything special for you. You would have made 0.5% more with the DFA fund than you did per year. 0.5% more per year after paying fees and expenses.
And you got all the help, the guidance, the hand-holding, all the stuff we know makes a big difference.
And you got a portfolio with over 10,000 stocks in it.
How many in the Invesco fund?
91.
Yeah. I mean, and this is the thing I still think when people ask me, I said, you have to decide what you believe. Don and I accepted a long time ago that we were going to get market returns. That means you hold thousands of stocks.
Right.
If you say, no, I know somebody at Invesco, they are really smart people, my son got a doctorate or whatever, and I'm going to go follow them, then you go right ahead. I haven't found, the academics haven't found, and the evidence shows that those people have not been able to do better than markets over the long haul.
Right. There you go. Thank you for throwing that in, because you will see all the time, we beat the market over the last 5 years. Yep.
Sure.
That happens a lot. Because there are thousands and thousands of mutual funds. And of those thousands of mutual funds, some are going to do better than the market because they bought Tesla at the right time.
Yeah, there'll be, and wait till you see some of the returns from some of the funds this last year, because they were in Tesla and they were in Zoom and some other issues that had great years. I will throw this out to our audience. I say, if you're listening, I know you teased me about cleaning up this weekend. There's only really one thing left in Seattle this weekend, and that's the Seahawk game would be tomorrow. So if you're listening to the podcast, I apologize. But you should know. You should know what the charges are, because if you're paying somebody as an advisor, that is a charge. You have the cost of the investments that's in addition to what you're paying the advisor. And what Don's trying to point out is these funds say, hey, our expense ratios are this low. Does not include often adding in that C share. If you have a mutual fund portfolio, look for all that alphabet soup, A's, B's, C's, etc., because you got to know what's going out the door.
Well, and bear in mind that A share of the same fund, the Invesco Global A, is going to, the C has no upfront commission. So you don't lose 5.75% of your initial investment to the broker. But in the A share, you're going to have that sucked out, and the fees are going to be lower by about 1% per year. which means you pay me now or you pay me later. You're paying me. Yeah. You're paying everybody one way or another. So what I really think the point is do you want no advice, just one-time sales pitch, and no advice going forward, no hand-holding, no work on your portfolio, no planning work, no risk tolerance work, none of that going forward, and you're okay paying more for that? Or do you want somebody to be there for you to whom you actually will pay less if you find the right one?
I think for most people that is a confusing decision to make because they don't understand It doesn't mean you don't understand the market, all that, because I've got some guy got mad at us about that. It's hard to understand the difference between those two things and why it's so significant to go with the advisor you just mentioned.
And it's so much easier generally to go with the broker because they're ubiquitous. They're everywhere. They're in your church. They're in your social club. They're in your family, for heaven's sake. 855-935-TALK, our number.
Talking real money.
Our biggest event of the year, Retire Meet America 2021, is now available to everyone in the country, and it's absolutely free. Sign up now at retiremeet.com, retiremeet.com.
Your guides to a really great financial future. Tom and Don are talking real money.
These kinds of things are the reason we think it's so important that you, one, listen to this show, go to Talking Real Money and listen to the podcast, go to Real Investing Journal and read about investing, get the help you need when it's offered, read up on real investing, and when we provide these wonderful opportunities for you to learn, like Retire Meet America 2021, sign up.
And you're going to learn about investing. You're going to learn about retirement income. You're going to learn about estate planning. You're going to learn about how to build a portfolio for the long haul from some of the best people. Paul Merriman, David Booth from Dimensional Funds, Rick Gregrick, tremendous people to hear from on that day.
RetireMeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?